Hey everyone, it is Julie here with TipRanks, and today we're taking a look at two trending strong buy stocks. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we use the TipRanks trending stock page to find some of the best rated stocks within the last 30 days. Now trending means that they've been picking up a lot of attention from Wall Street analysts lately. Today we're going to take a look at two of these stocks that come in with a strong buy consensus. We'll see what these companies do and of course how those analysts are weighing in for the stock's future. Just before we get into those, this is your reminder to make sure you've downloaded the TipRanks mobile app so you can access all of your favorite investment research tools on the go, and make sure you've hit that thumbs up button and that you're subscribed to the channel as well. Now let's get right into our trending strong buy stocks. First on the list is a company called Phreesia. They trade under the ticker PHR, currently priced just above $23 per share. Now, overall, in the past year, they are in the red about nearly 24%, but in 6 months climbed 39% and have cooled down 4% in the last 3 months. Phreesia is a software company in the healthcare world. They provide patient check-in solutions for medical practices. They provide solutions that transform the healthcare experience by engaging patients in their care and enabling healthcare provider organizations to optimize operational efficiency, improve profitability, and enhance clinical care. Through their software-as-a-service-based Phreesia platform, they offer healthcare organizations a robust suite of solutions to manage patient intake process and payment solutions for secure processing. They also provide life science companies with an engagement channel for targeted and direct communication with patients. They reported their Q4 and year-end results in mid-March, and they did come out with a narrower expected loss as the company continues to climb their way towards profitability. They'll be reporting their Q1 on May 30th, where analysts will be anticipating a loss of 48 cents per share, compared to last year's 70 cents. For their fourth quarter, they did report a loss of 56 cents per share, which was in line with expectations. They said that they ended 2024 with strong momentum going into 2025 and facilitated more than 150 million patient visits in the year, or more than 1 in 10 patient visits across the U.S. For the fourth quarter, revenue came in at $95 million, which grew 24% year over year, and their average number of healthcare service clients grew 26% year over year. For the full year, revenue came in at $356.3 million, which was up 27% year over year. Looking forward for fiscal 2025, they're anticipating revenue of $424 to $434 million, which would imply year-over-year growth of 19 to 22%. Following that last quarterly earnings report, we did have a handful of analysts weighing in, including one 5-star analyst from Needham. They said that their buy rating was based on a combination of factors, including Phreesia's strong finish to fiscal 2024 and their continued emphasis on profitable growth. The company articulated a clear go-to-market strategy that focuses on attracting high-value automated health system check-in prospects to drive more profitable growth in the future. The stock does currently come in as a strong buy, with 11 current analyst ratings, breaking down to 10 buys and 1 hold. The average price target comes in at $30.60, which would imply an upside potential of 32% from current prices. Looking at our detailed list of ratings down below, on the low end we do have our 1 hold rating here with a slight downside of 0.6%. A lot of price targets in those mid 20% upsides, and our high-end price target comes from a 5-star analyst at Canaccord Genuity who has an upside price target of nearly 60%. And the second stock we're taking a look at today is one that we actually touched on a few months ago. That is HealthEquity. They trade under the ticker HQY and are priced just shy of $80 per share. Their stock has climbed 39% over the past year, and in the last 3 months has climbed over 10%. HealthEquity provides a range of solutions for managing healthcare accounts. They hold a leading position as a health savings account and flexible spending account administrator. Their goal is to make health savings accounts more common than 401ks. HealthEquity works with a variety of interested parties, including employers, benefit advisors, and health plan providers, to create a large set of saving programs for customers to choose from. They shared their Q4 and year-end results on March 19th, where the company not only had an earnings beat, but also saw record annual revenue. For their fourth quarter, they reported earnings per share of 63 cents, beating expectations by 6 cents per share. Looking at the fourth quarter revenue, it came in at $262.4 million, which increased 12% year over year, and the full year revenue came in at nearly $1 billion, increasing 16% year over year. The company said that they were well positioned to continue their growth into fiscal 2025 as their technology investments enable them to continue taking market share, with an initial outlook for increases of approximately 15% in revenue and 20% in adjusted EBITDA. Just over a week ago, one analyst from JP Morgan weighed in on the stock with a buy rating. Their rating is based on HealthEquity's strong prospects for fundamental growth and financial performance over the next 3 years, saying that they are poised to double their earnings per share within this period, driven by significant top-line growth and margin expansion. They said that HealthEquity is supported by a combination of factors, including a favorable shift in custodial yields and a strong performance in the health savings account market, where they've consistently outperformed market growth. The HealthEquity stock is rated a strong buy with 11 unanimous buy ratings. And the average price target comes in just shy of $100 per share, which would imply an upside potential of about 24.5% from current prices. Looking at our list down below, it's hard to actually single out low-end and high-end price targets, as if we have pretty close range from the mid-teens up to mid-30%. On the low end, we have an RBC rating here with an upside of 15%, and our high-end price target comes from BTIG with an upside of nearly 38%. So that is a quick look at two stocks that have been trending with Wall Street analysts lately, coming in with an overall strong buy. Let me know your thoughts on these two companies in the comments down below. I always appreciate hearing from you guys. Of course, please keep in mind these videos are never a suggestion to buy or sell any specific stock, just sharing what those Wall Street analysts are looking at. So please make sure you're always doing your own research and due diligence. If you made it to the end of today's video, don't forget to hit that thumbs up button and make sure you subscribe to the channel as well. Thanks so much for watching. Have a wonderful day, and I'll see you back here next time.